as well. Here's an excerpt of that exclusive conversation.
I think today's monetary policy was completely on expected lines. The governor has and the RBI have made it clear over last few quarters, in fact, saying that they would obviously look at, number one, signals on inflation, and number two, more importantly, fiscal policy, which is expected very shortly in terms of continuity of the monetary accommodation. And I think if we see progress on fiscal discipline, which is now expected by the end of this month in terms of what is the fiscal deficit, I think we would be getting a clearer view of how we go into the future.
The governor also gave a figure for GVA growth for FY17 at 7.6%. Do you think that that is a reasonable figure as he puts it, or are we still short of what is expected out of India right now?
My personal view is anything, even 7% is a damn good growth in today's world. Therefore, whether it's 7, 7.5, 7.6, 6.8 and 7, I think it doesn't really matter that much as long as we build a stable and sustainable growth rate with very strong macroeconomic stability.
I also quickly wanted to get a word on the bank NPA cleanup that the governor has put in a deadline for. Do you think too much pressure has been put on the banks too soon for them to be able to take these hits in the next 2 quarters?
See, keep in mind, finally, if the government has to provide the capital, it begins to put pressure on the fisc. And over time, in a deflationary or a low inflation situation, the debt burden keeps on increasing over time. And therefore, I am a believer of facing reality, being pretty surgical and logical about it, and moving on. And that is something which is extremely important.
Just one last question. The budget's coming up. Any key expectations from the banking sector?
No, I think the banking sector would look at what's the capital commitment the government will be making for the public sector banks. I think that's important. At the same time, we want to make sure that the fiscal deficit is in control, because otherwise that puts pressure on the bond markets and bond yields go up. You're already seeing bond yields under pressure upwards, partly coming out of conversion of discom debt onto state government balance sheets. And therefore, we must look at fiscal deficit consolidated between center and the states.
Since you spoke of bond yields and liquidity, I'm sorry, just one last question. Do you think, was it a bit of a disappointment that RBI did not announce measures to ease liquidity in the system? Do you think there was a strong case for that?
See, I think you got to know that probably government will increase spending between February and March. So some of it may be coming out of surplus government balances. So as they get spent, you get money back in the system. But I have been in the financial sector for the last 35 years. And if there's one thing I know, February, March, and early April